Hello there. This is James, and you're watching OneRoyal, and it's live. It's not just OneRoyal live. It's OneRoyal live presents a watch along, and the watch along we're doing today is, of course, of the non-farm payroll. So a very happy NFP day to each and one of you. But before we get into the NFP, have a little discussion about what this potentially means to the market and why the market is very excited about this event. Please remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, that the risks at hand before entering any trade. With that out the way, let's get started. So indeed, the countdown begins to the all-important non-farm payroll. Now, for those of you who are new to trading, you might want to know what the NFP is all about and why it is important and why the market pays attention to it. Well, the NFP, is basically the number of new jobs created the previous month, not including farm workers, hence the name non-farm payroll. Very imaginative, I know. As well as that, the reason why the market gets so excited about it is because the higher the number of jobs created, goes to show that the US labor market is steady or growing, which of course is a good thing for the US economy and potentially for the USD. So potentially if you have a good number comes in, potentially you can possibly see a stronger dollar. On the flip side of that, of course, the lower than expected number shows that the US labor market is slowing down and is not so good for the US economy. And this could potentially weaken the US dollar. Now, the expectation for the NFP is for it to come in at 110,000 new jobs created back in June. Now, the previous number in May was 139,000 new jobs created. As well as that, it's not just the NFP which gets announced. In fact, today there is an awful lot of job data coming out all around the same time, which we will talk about. But it's not just the NFP. The NFP's the main, is the, it's the Beatles on the stage. The rest are entertaining, monkeys or the clowns, but it's still very important to pay attention to, because as well as that, we have the US unemployment coming in or being announced at the same time. Now, the expectation is for the unemployment rate to come in slightly higher than previous at 4.3%. The previous reading was 4.2%. Now, as well as that, we do, of course, have average earnings month on month, 0.3. Average earnings year on year, 3.9. And as well as that, this is one I also find quite fascinating, because the NFP usually comes out on a Friday. It's always the first Friday of every new month. But tomorrow is the 4th of July. So obviously it's a bank holiday in the US. So it's coming out today. And it's coming out at the same time as US initial claims, which is the expectation is 240,000. It's very rare for these two very key important job datas to come out at the same time. Now, those of you who are new to US initial claims, is basically US initial claims is the number of people who've signed on for unemployment benefit for the first time. Hello there, there's a comment here. Hi, how do you do? Unfortunately, I don't speak Arabic, I'm afraid, so I do apologize. Hope you're well, though. Hope you're good. Thank you for coming along to the show. Don't forget, this is a live show, so you can talk to me anytime you wish. But unfortunately, I don't read or speak Arabic, so my apologies on that. So my point being, again, it's very rare to have the NFP and the US initial claims come out at the same time. So we have a lot of job data coming out today. Now, okay, the expectation of the market is, yes, we are going to see a slowdown. We are going to see the market slowly, or the job market slowly slow down. This is why we're expecting 110,000, whereas the last number was 139,000. In fact, Morgan Stanley's chief analyst, Michael Gambon, he said, we think labor market demand is slowing, but so far the slowdown is modest. Modest. Look at those words, modest. So far, the slowdown is modest. Now, there was some other job data that came out yesterday, okay, which some people believe that this can give an indication of what the NFP number is. Personally, I've never seen the correlation, okay, and that's the ADP report, job report, which comes out usually a day before the NFP. And this is the private payroll, okay, the private payroll. Now, this did surprise the market a fair bit because it did come out negative 33,000 jobs in June. So that means the private sector employed 33,000 less people than the month previous. So again, and we did have a slowdown in the job market a little while ago as well in the private market. And as you can see, we are seeing a big drop off in the private sector. Now, a lot of people are talking about this. Sorry, a little sip. Is that employers, because of the uncertainty we have with tariffs, etc., maybe, just maybe, people or employers are reluctant to hire at the moment because they're not quite sure what's going to happen in the coming months. And we'll talk a little bit more about that in a moment. And there's another thing, which this is interesting. It happened last night. Now, I want to ask the question, and I want you guys to, let me know your thoughts and your opinions on this, what you think about this. Because you need to ask the question, does Trump know something about this number? Because don't forget, the president gets to see the job data before anybody else. He's the first one, because the NFP is a government organization who does the number. Does he know something that we don't? And the reason why I asked that question, and please jump in and let me know your thoughts and your opinions on this, is because he tweeted, is it called tweet anymore? I don't know. He posted this on Truth Social last night. He said this: too late, should resign immediately. Who is he referring to that? He's referring to, of course, Jerome Powell, the chair of the Fed. Because the Fed, and this is the driving factor why this job report is very exciting today, the Fed has not cut interest rates despite the pressure that Trump has put the Federal Reserve under and the open criticism of him and his leadership of the Fed. So the fact that he's texted this or messaged this makes you think, is the number really that bad? That, of course, he's going to blame Jerome Powell for not cutting rates and he should resign immediately. Or is the number really that good? And there's no excuse for the Fed. I don't know. This is the question. And I want you to know your thoughts, what you think about this. Is this a case of that he knows something and the number is really bad? And of course, he wants to not blame the tariffs or the trade uncertainty, which has been impacting the market over the last couple of months. Instead, this is all about, the Fed not acting. But anyway, let's talk about the build-up, what the market is excited about in reference to this, because there's a lot of anticipation about this. And the main thing is the market, despite all the uncertainty, The S&P 500 has hit several new highs. In fact, it's hit 2 new highs just this week. So the market, despite of all the concerns and everything going on, the optimism is still there. Which leads me on to another question. And then guys, ladies and gents, please jump in and let me know your opinion, your thoughts on this. You know, obviously, the optimism driving the market currently, which is why the S&P, you know, is hitting new highs almost every single day, is over the fact that, for one, the Fed will cut interest rates and potential trade deals being done with the US. Leads me on to a point in a minute I want to raise. You know, because we have had weaker economic data over the last several weeks. And it has pushed the market into thinking, because of the weaker data, the Fed will indeed act. Okay, and they will maybe cut rates twice instead of just a once, which the market was thinking a month ago. So this is why there's a lot of optimism in the market. And, you know, the other reason why this is, of course, obviously Trump's threats about finding replacement to Powell already. You know, Powell's tenure as the chair of the Fed is not up till May next year. So the fact he's openly talked about finding replacement this soon also makes you think, you know, that Powell's power, when we knew the replacement, is going to be very little. So he's going to be forced into cutting rates. But let me lead you on to a double-edged sword. And I want to know what your thoughts are and what you think. Jump in, tell me your thoughts on this, what you think about this. But here's the thing. So the lower than expected number, lower NFP, shocking NFP, could boost confidence further, right? You should do, because that's what the market's riding on. You know, the Fed jumping in, cutting interest rates, US trade deals being done. Again, this is an open question to everybody. Jump in and let me know your thoughts. Because however, here's food for thought. First of all, we haven't seen any real US trade deals. Yes, we got a deal with the UK. Big deal. Easiest trade deal to do. Yes, there was chats today of, you know, Trump announcing a deal with Vietnam. Big trading partner, but not the biggest. There's no progress. I mean, there's threats with Japan, big trade partner. There's threats with the EU, big trade partner. We haven't seen any trade deals. And as well as that, a job number below 100,000, and if unemployment maybe reaches 4.4%, could this really, make the market suddenly realize this tariff trade war is having a bad effect on the economy, and a rate cut may not be enough? Plus, we have the revised numbers. The last couple of months, every NFP has been revised. Plus, we have Trump's big, beautiful bill getting closer and closer to being approved, which is not necessarily a good thing. And then we have Liberation Day Part 2 just days away. Anyway, we're 30 seconds away. So let's have a look on what's going to happen. I'm watching at the euro. Let's go through some potential scenarios. Potential scenario number 1, NFP announced, expected, close expected, markets priced it in. Potential number 2, lower than expected, the market prices a Fed rate cut, and USD comes under pressure. And market continues a bull run. 3, NFP announced a lot lower. Initial rejoices, but then reality sets in. And then 4, NFP announced higher than expected, boosts the dollar, etc. And then we've got NFP announced, and the market pays no attention, thinking that the rate cut and deals will be done. So anyway, let's go. Oh, crumbs. So let's go for it straight away. So the euro is on the move lower straight away. Actually, this is gold, sorry. Let's look at the euro. Look at that drop on the euro. So let's find out what the number is. So NFP. All right. Shocker. Absolute shocker. NFP is announced higher than expected. Comes in 147,000. Hence the euro dropping. Hence us seeing a stronger US dollar. 147,000. Unemployment rate, 4.1%. Again, lower than anticipated. Anticipation was it to come in at 4.3%. Let's have a look. Average earnings is down month on month, 0.2%, opposed to 0.3%. Average earnings year on year, 3.7%. Okay, 3.7%. Initial jobless claims, also lower, 233,000. 233,000. Continuous claims, which I'm really interested in, higher, 1,000,964, means people are still struggling to find employment. But 147,000 is the number, higher than expected, a lot higher. In fact, we talked about revised numbers. The previous number has been revised to 144,000. So as we can see straight away, stronger dollar. As obviously the market is now thinking the Fed are in no rush to cut rates. Gold is the same. Gold's under pressure, $3,330. So stronger dollar against the gold. British pound, the same, under pressure, now dropping down to 135.96. And let's have a look at the dollar yen. Dollar yen has got to be spiking up. Look at that spike on the dollar yen. Dollar yen. And look at the dollar index as well. Spiked up back to 97. And now don't forget, the dollar has been trading at levels not seen since early 2022. The greenback's been under a lot of pressure. So this is really, really interesting news. Everybody was expecting to see a slowdown, myself included. But instead, we've seen something better than expected. So then again, what did Trump mean? So Trump was obviously saying, look at the job market's great, lower interest rates. So this is obviously what Trump meant earlier on. So breaking news, NFP announced higher than expected, 147 versus 110 anticipated. Previous number revised to 144. Initial claims came in lower. Unemployment rate comes in lower. Average earnings both down, but overall a very steady, according to this data, a very steady, strong US labor market. Hello there. Watching from Bangladesh. Hello there. I hope you're good, my friend. Really great to see you. Hope you're good. Thank you for saying hi. And hello. Good to see you, buddy. But yeah, so that's it. Breaking news, stronger US dollar. So yeah, what do you think about that, guys? What's your opinion on that? Let me know your thoughts, because again, I think that was the big surprise. I think everybody, hands up, myself included, was expecting a lower number today. A lot lower, because obviously ADP and all this and the revised numbers. But that is a lot better than anticipated. A lot better number than we thought it was going to be. But yeah. So does the Fed need to cut rates when the market or the job market is steady? That's the big question now. It'd be interesting to see how the S&P and how the NASDAQ and how the market opens to this news. Because obviously we've got a strong labor market, so it's a good thing. It's not necessarily about rate cuts, is it, all the time? The whole point of rate cuts, of course, is to inject life into the economy, encourage people to spend money and borrow more. If there is still a strong economy and the market is strong, you don't necessarily need to do that. You potentially need to hold it to keep it steady. So and clearly the labor market, like I say, 147 NFP is shocking, really, compared to what everybody, myself included, was anticipating. We're anticipating a lot lower than that. First signs, the cracks of these tariffs and the revised number as well. So, yeah. Let me know your opinion, guys. What do you think, ladies and gents? What's your opinion on this? Do you think, what's your opinion on this? What do you think? Do you think the US, this goes to show the US market is stable? The Fed doesn't need to cut interest rates, doesn't need to hurry to cut interest rates at the moment? or or even let me know what you're trading. What's your favorite instrument? What you're trading? Are you a gold trader like me, or are you a euro trader, indice trader? Let me know your opinions. The whole point of these live shows, as well as watching exciting stuff, like watch-alongs like this, is to share ideas, talk and chat with each other, build a community, so to speak. I mean, I've had quite a few comments. Unfortunately, some of them are in Arabic, and I don't speak Arabic, unfortunately, so my apologies on that. But I've had a nice comment from somebody watching in Bangladesh, which is great, and I really appreciate that. That's awesome. So feel free. As we're waiting for anybody who wants to chat, don't forget you're watching me obviously on YouTube. We will be on the blog, our blog as well. And if you like this sort of thing, this sort of type of content, which we do regularly, don't forget we go live every day as well. That's a good comment. That's a good point. Gold seems to be holding better than expected and need maybe more pressure to finally drop. This, I think, is a great question, Martin. Fantastic question. In fact, let's just bring up gold and have a look at it. And I like to talk about this. What a fantastic question. Let's bring gold up, actually. Because here's the thing. Here's the thing. I think got a valid point. This is on a 30-minute, Martin. It's a 30-minute chart. So obviously, you've got the initial reaction. But you see, that's the key sort of trend line there. If you look at a daily, we look at daily here, okay? We're still, we've tested it over the last couple of trading sessions, but it's managed to recover above it. Now, this is a question for you, Martin. Let me know what you think on this, or anybody else who's a gold trader on this point, actually, is that we've had a lot of optimism over the last couple of weeks. S&P hitting all-time highs, NASDAQ hitting all-time highs, weaker dollar, obviously, which also boosts the yellow metal. US Treasuries recovering slightly. But the yellow metal is not sort of losing its attraction too much. Okay, it's not losing its attraction too much, which makes me think, despite all the optimism, there is a little bit of the market out there thinking it's not over yet. We better be cautious. This is not necessarily finished. The good times are here to stay. So though, this amazing bull run it has, and if we have a look at this incredible bull run, actually move it out so you don't see my ugly mark there. You see this amazing bull run it's been on. And yes, it's really struggled to break this key area here. It says to me that the market is not 100% convinced that everything is rosy, everything is good. As well as that, you still got a number of central banks buying up gold reserves. It means they're cautious as well. So I think, Martin, you've got a really good point. I think it's holding up better. I think the market is still acting on the side of caution. Even though we're optimism, and we obviously got a weaker dollar, which has helped it, I think it's not convinced. And I think that's why gold's still got a bit of its shine. But a great question. All the same, a brilliant question. Well, a brilliant point, actually, a brilliant opinion. That's more like it. That's what we need. Like I was saying before, Martin's brilliant question or brilliant point. If you are watching me on YouTube and you like this sort of content, by all means, subscribe if you like. Hit the notification button so you know next time we're going live. And if you like this type of thing and you put up with me being over a few final support, again, this again, never really valid point, Martin. Below $3,300. Yeah, just below it, isn't it? Actually, the final real key level potentially is around about 3,269, which is what I'm keeping an eye on. But yeah, because that's where the trend line has been. And it tested it on 2 sessions there. So yeah, I think it's a very, very, very valid point. Very valid point. Very good. You're definitely a gold trader then, Martin. You're in good company, buddy. I love it. I love gold. Just as a sad person, just so you know, when I first traded gold, it was trading around $636 an ounce. Yes, I'm that old. So like I was saying, if you're watching me on a YouTube and you like this sort of thing, subscribe if you like, hit the notification button so you know next time we'll go live. And if you like this sort of thing, you can put up with me over top enthusiasm, my excitement for the market, by all means, give me one of these. As well as that, on the odd chance you are not part of the OneRoyal family and you wish to know a bit more about us, there's a little link in the description below. By all means, click it, have a little look about us, see if if you're more interested, and if you like, maybe you want to become part of the OneRoyal family. As well as that, don't forget, I do live shows every day, or almost every day, here on YouTube and various social media sources, where we talk about the markets, not just watch-alongs. I do daily updates as well and daily discussions where we talk about what's happening or what the topic is, so feel free to do that. As well as that, I have noticed that a lot of people go back and do watch the recordings afterwards. They miss the live shows and they watch the recordings afterwards. Brilliant. I don't mind. It's great. Any type of support is greatly appreciated even. So if you are watching the recordings, it's not live, and you have a comment, you can put it in the comment section below. I will see it. I will action it, answer it next time I go on live, which is practically almost every single day, especially when something is happening in the market. Anywho. Oh, brilliant. Thank you, Martin. I think it's really lovely comment. Love the session. Nice job. First time here, by the way. Good. Oh, thank you. I really appreciate that, buddy. I really, really do, mate. That's really nice. Thank you. And thank you for coming, Martin. And thank you for coming along and, jumping in with comments and stuff. It's really, really good. I really appreciate that, mate. Thank you. I really do. Thanks so much for that. I appreciate it greatly. Anywho. Oh, bless. Big shout out to a number of people. Quite a few people actually, who Mustafa, Mohammed, Ahmed, etc., who did say comments before the show. Unfortunately, it was in Arabic, and I don't speak Arabic, but thank you very much. Shout out to Brokers Court, watching from Bangladesh, and a big shout out to Martin, obviously, for jumping in with nice conversation about gold. Really, 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 really appreciate it. Thank you so much. I really appreciate that. Anywho, if there is no further questions, what are further things people would like to say? Leaves me to say one thing. Don't forget, these little videos are for educational purposes only, and in no way whatsoever should be taken as financial advice. I always suggest you do your research, do your due diligence, and of course, with the risks at hand before entering any trade. Till next time, every single one of you, trade safe.